Take a look at an intraday chart of gold. Every time you think it's stabilized, it's now down $135, lost about $30 in the past, I'd say 2 minutes. Rick Santelli watching this incredible intraday action this morning. Hey, Rick.
Hi, Carl. First of all, and I don't mean to sound like a know-it-all in any way, but I'm reading a lot of stories about people that say, I've been looking at gold for 40 years and I've never seen anything like it. I disagree. There was a period of time in early 1980 where the futures markets in Chicago, before COMEX owned the contract, it was a Chicago Mercantile Exchange, and that contract had volatility much bigger than this, considering its price was half of what the current price is. All right, push that aside. Now let's consider this. Some of the numbers, and believe me, listeners, we are talking in generalities. It's very difficult to pull in all the bullion, the over-the-counter, the ETFs. But it seems to me that one large wirehouse in particular seems to have been rumored to have had a sell order early Friday that was anywhere from, 3.5 to 4 million ounces. Now, I can't tell you it's totally true, but looking at the price behavior, I suspect it is. That's anywhere from 100 to 125 tons. And that is rumored to be just how much moved on the opening. But it almost doesn't really matter what the number is. Let's think about some things and try to draw some generalities. First of all, we know that a lot of these markets were further incited on the 4th of April, when the Bank of Japan pulled out a bazooka even bigger than ours considering the size of their economy with regard to things like quantitative easing. That started a whole chain reaction on their yield curve. Their 2-year note today is hovering around 14 basis points. Where was it the day before the Bank of Japan met? At 6 basis points. That same day, the 4th, we saw a 32 basis point low in the 10-year, which closed at 65 today. First question, do you think central banks work in a vacuum? Do you think the Bank of Japan never talks to the Fed, that never talks to the ECB? I'm not buying it. Now, we also know that one of the instigators for the sell-off in gold was rumored to be what the Cypriot National Bank would do. But Mario Draghi and the ECB were very careful to say they can't tell the Cypriot central bank what to do, and neither can politicians. They have to decide on their own. But I can't believe that if they're all talking about quantitative easing, central banks being large holders of gold, that there isn't some communication there. Now, do you think it makes the central bank look bad when gold is at 18 or 1900? I think so. So what does it mean now? Back to you.
Rick, before we let you go, having made your chops trading this a long time ago, when does it get concerning if now down 142? When do your eyes really get open?
Well, first of all, anybody who picks bottoms is going to probably get carried out. And even if they pick it correctly, to me, it's a dangerous game. Remember, those highs made in early 1980, adjusted for inflation, were about $2,300 an ounce. We haven't even gotten there adjusted for inflation. So suffice it to say, those highs in 1980 marked the end of gold for a long time to the upside.
It tends to move in long trends. That's absolutely true, Rick. We'll come back to you a little bit later on an important day. Thanks.